Welcome back everyone, we're back at it with another video, and today we're going to be discussing a second version of the give back play. If you haven't yet watched the first one, I'm going to put a link to that video on the right hand corner of the screen. I'm also going to include it at the end of the video in case you decide to watch this one through first. And at the end of the video, I'm also going to discuss the importance of cutting our losses short and why we traders do so. So without further ado, let's get into the second version of the give back play. Okay, first item we need to see is our standout igniting bar, followed by our risk pause. However, unlike the first form, which the pause is actually inside our igniting bar, in this form of the give back, the following bar is the one who slightly dips inside our igniting bar, revealing to us our protective stop and our trigger entry. Keep in mind, this slight dip should not exceed beyond the top 1/3% of our initial igniting move. And if this bar can take itself out like this, now we have the right to jump into the trade, maintaining our narrow protective stop under the low. And that, ladies and gentlemen, concludes the second form of the give back play pattern. Now that we're familiar how the pattern looks like, let's start to build some context. Our first stop, the 15-minute chart. Here we can see Uber put on a nice 5-bar bounce off the lows and consolidated above the MAs on the top 1/3% of that move. The following day, Uber again put on a nice move, this time exploding off the 20 and a simple period moving average, and for the rest of the day consolidated on the top 1/3% of that move. And here is where we are today. Now let's take a quick peek at the hourly chart, and as we can see, there are no major resistance immediately above us. And lastly, the daily chart. And on this chart, we can see the nearest place of potential resistance is the declining 20 simple period moving average, but that is over $1 away from the current price. Now that we've analyzed the higher time frames, let's move on to the pattern recognition in our main trading time frame, the almighty 5-minute chart. But before we do so, ladies and gentlemen, if you enjoyed this video so far, hit that like button, subscribe to the channel, and don't forget to turn on that notification bell so you know every time I drop a new video. And now, the 5-minute chart. Here, we have our nice and tall standout igniting bar clearing everything to the left, followed by the give back bar dipping slightly into our igniting move, revealing to us our protective stop and our trigger entry. Now, all we have to do is wait to see if Uber triggers us into the trade. And it does. Job 1 is complete. On to risk management, the most important part of any trade, placing my stop under the low of our give back bar. Now, whether you prefer hard stops or mental stops, it is vitally important that you protect yourself, because even the best setups can and will fail on you. So make sure if you take a trade, know where your stop is and protect yourself, and protect yourself. Yep, this particular skill set will help you prevent a small losing trade from turning into a massive losing day. Something I often did when I first started trading, and I hope this Uber trade can serve you as an example of what could have happened if I had held my position beyond my protective stop, turning a small losing trade to a much larger losing trade. So again, ladies and gentlemen, thank you so much for your time and attention. If you enjoyed this video and want to see more, don't forget to hit that like button and subscribe to the channel. And if you have any questions, you can drop a comment or reach out to me on any of my socials, which I'll leave a link for in the description below. Hope you have a great rest of your day. See you in the next video.